We welcome you back to the program, and we're very happy to have William Jordan back with us today from William Jordan Associates. Welcome back to the show.
Thank you.
I'm a comment, you know, a lot of times people put so-and-so and associates on their business card so everybody will be impressed with this great staff of people you have, and you go to their office and there's one guy and one desk. William Jordan Associates really is lots of folks. You have lots of people in your office to back you up.
It really is. There's 7 of us on the team, and we have CPA, estate planning attorney, realtor, real estate attorney, asset protection. So hope to put together and have for our clients kind of a wealth team approach.
It really is associates, folks, not just, like I said, one person and one desk. A lot of folks I know read Life After 50 and your column, this current month's issue. You talked about people selecting a financial advisor. Could be you, could be somebody else. You know, stock market goes up 300 points, it goes down 500 points, it goes up 200 points, it goes down 100 points. The last few days have been very volatile. A lot of reasons for that, perhaps, but the average investor maybe isn't so sure about the reasons or cares about the reasons. They want results.
Sure.
With all of that going on, how can somebody be happy with an advisor with this volatile market? Are they going to blame that advisor for everything?
Yeah. Well, yes and no. I guess the question that I would ask when folks will call me and they'll complain about their performance is, well, what's bringing that performance about? What is the underlying philosophy that you have or that you communicated to your advisor, and are they on the same page with you? If you are aggressive in your investments and you've asked your advisor to be that way, you're going to experience this kind of volatility and you'll be right up and down, and hopefully you still feel like you can weather that aggressive storm. So I always push people back to just reassess the philosophy of their own personal investment philosophy as well as their advisors and make sure there's a match. If there's a match, then before you just jump ship or change advisors, maybe you need to circle back and just revisit what's going on, because it might be that what you've communicated is being implemented and you're now changing the advice you're giving your advisor so that they can give you a different plan. But if they find there's a philosophy mismatch, then that is an appropriate time to make a change.
If you're saying A and they're doing B, might be time to make a change.
I see that a lot.
Or try and get them to come back to A.
Yeah. Well, what I see quite often is an investor will say or tell me that, oh, I told my advisor I want to be very conservative, I don't want to take a lot of risk, and then I look at the portfolio and it's 80% stocks or mutual funds. Somewhere there was a pretty significant disconnect, and either the advisor's philosophy is so different from the investors, or they just really had a different conversation than they think they had.
So let's say either the current advisor and the client share the same philosophy, or they make a change to someone who shares their philosophy. Can you get more specific in your designations? You know, some people have even political or maybe even religious or issues with certain products or certain industries. How specific can people get with their advisor?
Yeah, that's a great point. People can get extraordinarily specific with their advisor, and I have had some clients who will say things like, you know, based on my beliefs or my personal philosophy, I don't want to be investing in certain types of investments, and that's very appropriate. It's called socially responsible investing and such. Most advisors can handle that and would be prepared to talk about that. I would kind of first circle someone back before they get that deep to start with the philosophy, and they really need to seek someone out who's going to be a match from a philosophy standpoint and make sure that if their focus is protecting, they're not working with someone who's a great guy or a great gal, but whose focus is being very aggressive. Make sure they're on the same page. So I'll tell folks when they come in the office and I ask them about their philosophy. If they tell me they want to be ultra aggressive, I tell them right then, I'm probably not the guy for you. Because if we work together and you want to be ultra aggressive, you're going to be disappointed with me, because that's just not who I am as a financial advisor.
Do you ever find that some people want to have the best of both worlds, and you may find people that have, you know, a significant size portfolio, and they may take half of it and go with someone like you who's a little more conservative, and then find somebody who's maybe more aggressive and turn half of their portfolio and let you two kind of work your magic in both areas?
Yes, that's a great point. And what we've actually done with many of our clients is we almost divide their portfolio into 2 portfolios, what I call the lifestyle portfolio. How much money do they need conservatively invested to take care of all of their needs for the rest of their life with no concerns about running out of money? For many of our clients, there's then an excess amount. That I call the legacy portfolio, and there we can be a little more aggressive. We can be more very long-term philosophy, because they're not likely to use that, or if they do use it themselves, it will be in some kind of family legacy way. Maybe they buy a second home that's a vacation home for the family and get everybody together. But now they're really managing those portfolios with two different philosophies. And yes, even having two advisors could be appropriate there. I just would then remind them, you can't compare the two advisors, apples and oranges, because in the good years, the aggressive one's going to look really a lot better, and in the bad years, the conservative one's going to look better. So don't evaluate them for 1 year and then pick the person who's done the best. It's based on philosophy as to who's done the best.
In your literature, you talk about suitability versus fiduciary. Could you explain those terms and kind of what that's all about?
Yeah, I think you've struck at the heart of when an individual is interviewing a financial advisor, they should ask them what is the responsibility or the accountability that the advisor has to the client. It's either a suitability requirement or a fiduciary requirement. Suitability basically means that by federal law and rules, et cetera, the advisor has to recommend investments that are suitable, that are appropriate for the person they're talking to. So, based on their age, based on their assets, the amount of income they're taking, that's to prevent a financial advisor from recommending a venture capital investment to someone who's 75 and just wants short-term income and liquidity. Wouldn't be appropriate. Now, under the umbrella of suitable investments, so there's a huge amount of suitable investments. And the example I would give is, let's say someone works for a large financial institution, and that financial institution says, we want you to recommend these mutual funds this month or this week. Well, the advisor might know of other mutual funds that would be less expensive, might be better performing. The suitability requirement, they don't have to talk about that, because what they're talking about, even though it's not the best, it's still suitable. Now let's look at the other side of the coin, and that's the fiduciary, which I really suggest that individuals should look for and should seek out someone who's a fiduciary. And what that basically means is the advisor has to make the recommendations, give advice, as if they were the client. And literally, if you came to me and said, here's my situation, this is what I'm looking for, if I became you, or if I could transfer everything I know about investments into your mind, what decision would you then make knowing what's highest and best for you? It's just a much higher standard, much more rigorous, and so when you're dealing with a fiduciary, you can have a lot greater confidence that you're hearing the absolute best, not, well, if I ask enough questions, I'll find out there's some other choice I could consider.
Yeah. I would imagine some of the philosophy behind selecting an investor may have to do with the compensation factor. And my understanding is folks like yourself and others in the investing field, there's different ways they're compensated. Sometimes it's a straight fee.
Yes.
Sometimes it's a percentage of the portfolio they're dealing with.
Yes.
Sometimes it's a commission basis that they're getting paid not by you, the client, but maybe by the mutual fund or the insurance company or something else is paying that advisor. Indirectly, you're subsidizing them because that's part of the money coming out of your portfolio, but you're not directly writing them a check to pay for their services.
Yeah, you've hit really, I think, on all of the options there. A fee-based advisor can mean one of two things. It can mean they charge a percentage of the assets they manage, which is not the only way that I work, but it's probably the most common way that I work. Sometimes a fee-based advisor means they charge a lump sum for creating a plan, and then they just hand the plan to the client and say, okay, now you can go manage that. And I've done that as well, though most of the time folks want someone to really oversee things. And then the commission alternative is there as well. And it's not that there's a right or a wrong, it's that they need to understand what they're paying and how they're paying it, and then just make sure that they're comfortable with that approach. The time that a commission approach would probably be best is if somebody's going to meet with a financial advisor, they want a portfolio put together, and they're really not going to change it for the next 10 years or more. It's primarily going to stay the same. They don't need anybody to keep an eye on it. They're not looking for someone to actively manage that portfolio, keep hands on. Commission would probably be the least expensive way to go in that circumstance. However, if they want someone who's constantly involved and who's going to make changes as those are appropriate, commissions could then get way too expensive, and now you're better off in a fee scenario. So they just need to ask the question and know what their preference would be.
Final comment, any last piece of advice for somebody seeking an advisor?
Yeah, I guess in general, I'd say I've kind of like the way I like to do business. I enjoy working with folks that have a business in my local community where I'm going to run into them in the grocery store, where they're a local presence. I would in general advise people to find someone whose name is on the door, whose name is on the building, because they know, well, where's the final responsibility? And they also know there's no one behind them saying, this is what you need to recommend this week. So make sure that you're dealing with the person who has the ability to pick and select any investment, not only either what they're being told to do, or the other comment I would add into that is not only just one or two investments that they're licensed to offer. Some people will present themselves as a financial advisor, but maybe they only have a life insurance license, so they're only going to talk about annuities.
Right.
Annuities aren't always a bad investment. Sometimes they're a great investment, but it has to be the right fit. So I would ask that question is, what investments are you allowed to recommend, and is there anything you cannot talk about? Now you know where the person you're talking to is coming from, and you know what recommendations are going to give.
And of course, there's advisors in lots of places. Someone independently like yourself. There's named Stockbroker International Association, names that we all know that we see every day in the paper. And then even banks and savings and loans now have been granted the permission. So there's usually a desk off to the side of the office in the bank with a financial advisor person there as well.
Yeah, and that's where I'd watch out for titles. Nothing against banks. They provide very important services. Generally speaking, that's kind of where a financial advisor might start their career, to just start learning the business a little bit. If you find someone who's independent, make sure they've been around for 10 years or more, not just starting their career. I mean, think about how much we've seen in just the last 5-7 years in the markets. So find someone who really, that's what they do. They've done it for a long period of time, at least 10 years or more, and that they've got the accountability to the investor, where if there's a problem, if it's a big national firm and there's a problem and an investor's unhappy, that's not really going to affect that national firm. But when you've got I have one office that's here in the local community, and if I don't make sure my clients are happy, that word gets around real quick. So it almost makes the standard of accountability to the clients even higher.
Right. All right. Hey, thank you for joining us. Some good tips and
always a
appreciate
pleasure.
Your information today. We'll see you back in a few weeks. Good to have you back on the show. William Jordan and Associates, and as I said, it is associates, several folks there in the office to assist you. If you want more information, give them a call, 380-8600, and you can make an appointment and find out more about how they might be able to assist you with your investment decisions. We'll be back with more as our Wednesday program continues for you here on Channel 6 TV.
Thinking about your money, your investments, what's most important to you, reaching for those last few percentage points of gain in a good market, or protecting from losing money in a bad market. If you are like me and my clients, you said protecting from losing money. I'm William Jordan, and at William Jordan Associates, we help our clients protect their assets while increasing their income. Want to protect from losing money and maximize your income? Call to attend one of our free maximum income workshops today.